You're listening to the AZREIA Show. If you're looking for quality real estate investing information that you can trust, you've found it. Stay tuned and join the tens of thousands of members that have already benefited from AZREIA, your home for education, market information, support, and networking opportunities that will advance your real estate investing career.
Welcome to the AZREIA Show, another episode in the books. We're about to kick off. I have a special guest, Rick McHone, a real estate agent, and an awesome YouTube channel, which we'll talk about for real estate agents and real estate market data. So I'm really excited to have Rick here. Rick, like we were talking, let's just kick it off and not waste any time. Let's talk shop on.
Yeah, this is fun. I love your setup.
Thank you, man. Thank you for being here and taking the time out of your day. I love in-person interviews rather than Zoom if we can, right? So nothing beats these opportunities and build relationships.
Yeah, this is fun stuff. I don't have the setup at my place to be able to do this. I wish I did. It's one of my goals. Because conversations are a little more natural, and you don't have to worry about the tech too much. You know, when you're live streaming or zooming with somebody, you're trying to talk and click the mouse at the same time, and sometimes you don't even know what you just said.
And as men, we don't know how to multitask.
That's right.
So that's pretty hard, So, well, yeah, let's start there. Tell us about, who you are. How'd you become a real estate agent? Just a brief background so we know.
Okay, well, I've been a licensed agent since 2012. Prior to that, I owned a couple businesses, failed miserably. Prior to that, I was the director of sales for Oro Wheat Bread, Entenmann's, Thomas, Bimbo Bakeries USA. So for the whole Southwest area, did that. I was with them for 35 years. But in 12, I got my license, and I started out with HomeSmart locally here in North Central Phoenix. And then I jumped around like everybody does. And now I'm with Barrett Real Estate, and I've had really good years, really bad years, and got a couple funny stories for those. But so I ventured out into the YouTube world. I mean, as real estate agents, you're always trying to find that niche.
Okay.
And I always kind of had fun making videos anyway, just funny stuff, green screens and nonsense, and just as a hobby. And so along comes COVID, they tell you, I mean, I was so shocked when they canceled spring training.
Oh, yeah.
I mean, like, they what? I just was in shock. And then they told us, and then we had an 8 o'clock curfew. And 2 weeks, stay home, flatten the curve. What?
Yeah.
I thought, real estate's doomed. It's doomed. We don't stand a chance. Every white-collar workers are going to be laid off. Everything's shut down. I didn't know that they were going to be dropping money from helicopters.
Yeah, okay.
I mean, who saw that coming, right?
Nobody. Who saw COVID coming?
Yeah, so I'm sitting there and I'm watching these young YouTubers giving you all these tips and things that they think they know about the next stimulus check that's coming. And I thought, well, shoot, I'm home. I'm stuck here. Let me see if I can learn how to live stream on YouTube.
Okay.
The very first one I did was with my lender. It's still up there on YouTube. It's the most awful experience you'll ever have.
Yep.
Is this on? Is the mic work? Oh, wait, your camera's off. No, first minute and a half, it's just technical snafus.
Yeah, I hear you.
And by the time, and to this day, it's been up almost 6 years. I have 85 views.
Wow.
So I tell people, if you make a bad video, don't worry about it. Nobody's going to watch it.
Yeah.
So I did a live show every morning at 8:30.
Okay.
Here's what I'm seeing. Here's our current inventory. Here's how it's trending this week. I don't make long-term projections. Do you know anybody that's ever right? Zillow, CoreLogic. I mean, nobody. Zillow just came out last week revising their forecast. Well, that's an easy job. We were wrong. Here's what we think now. So I just ended up building an audience at 8:30 in the morning. I say, wasn't doing anything else.
And that was Maricopa County real estate
Cromford
information.
market data encompasses all of Maricopa County and parts of Pinal.
Got it. Yeah, we love the Cromford. Tina Tambor does our market update every month at our main meeting. Yeah.
I think we're one of the few markets in the country that has that kind of resource.
We are. I was actually just at the National AZREIA convention. All the leaders get together. There's over 100 AZREIA owners, and nobody has what we have.
I think I get a lot of views from real estate agents now because I'm a data channel.
Yep.
If you want to know what's going on, you look at me. I'm sharing numbers. And,
Okay.
And I kind of poke fun at some of the forecasts. And but I'm highly skeptical by nature. In other words, I kind of beat up on our industry a little bit because we get caught up in these memes and title company representatives telling marry the house, date the rate. Where did that come from?
Oh my God, I have no
Okay,
idea.
so that somebody obviously sat in the room and said this would be a good line to get people, and then out it goes. You know, tell your lenders this, tell your agents this, and so everybody's saying marry the house, date the rate. Of course, I was going, no, don't do that.
How come? Why don't you like it?
I like things I can depend on.
Mm-hmm.
So what you're saying on marry the house, date the rate is get the house and you can lower your rate later. Well, maybe. You know, I like certainty. I mean, it people that bought in 2022 thinking that they could marry the house and date the rate and refinance in 2023 didn't find that too good, or even in 2025. So, not that it harmed anybody, but I just don't like now there's a lot of hype. Rates are going to come down. They're going to be lower. And when they do, there are going to be so many buyers out there that, you know, you better get out there now. And I'm like, no.
We've been saying that for what, almost 2 years now since
it doesn't happen that
they
fast.
spiked up.
Yeah. And then there's these awards. There's a service called Broker Agent.
Okay.
Nice outfit, kind of a marketing thing. But we pat ourselves on the back a lot in the industry. We have these magazines that, all these glamorous photos on the front
Mm-hmm.
that has no circulation outside of just in the lobby of the title agency or in the lobby of the brokerage. But your photos on it, you look great.
Yeah, yep.
Agent of the Year. Well, this place sends you these certificates that you can post on your social media that you've earned. My worst year in real estate, it was so bad I had to go out and get a part-time job this 1 year.
Thank you for sharing that. Like
It was horrible.
no one talks about that back end stuff. And talking about those certificates, here at AZREIA, we get emailed all the time from like all these big publications. You're like, whoa, I love you guys. I respect you guys. You want me to pay $1,200 for a piece of paper? It's like to put your name on it. Like, I ignore those.
Well, they sent me, congratulations, you've earned an award for being an outstanding real estate agent in the year of, I can't remember the year. And I thought,
I got a part-time job.
so far I've sold one house.
Yeah.
And I earned, so I filled it out, and I didn't pay anything. I got this award, and I still see agents that put that on their social media. I won it again. Okay.
Yeah.
I looked up your numbers. You sold 3 homes, and so. But again, we're doing this.
So okay, what's your thought on that? Because in marketing, right, you're doing anything you can to get attention and let people know you're the best so you can, earn trust, or like that doesn't, how's that earn trust? Like what, the general public doesn't understand all this stuff that we see.
It doesn't. I think it eventually comes back to you too. And I think that's what I really like about YouTube is you're talking to people. Mm-hmm. You're sharing numbers. And if you're wrong, you have to own up to it. And so it's like for the longest time for this year, last year I was saying January's not going to be as good as everybody thinks it is. In fact, I think it's going to be very disappointing for a lot of people that list their house. I'm not going to forecast much beyond that, but I can tell you, based on the numbers I'm seeing now, January's bad. Well, people can come back in January and go, you were wrong, Rick. And I can go, yeah, but I wasn't. Even a blind squirrel finds a nut every once in a while. But I said, but I think when you're looking at raw data and you're just saying, here's what it is. Like our inventory levels got down to like 4,800 homes in this market.
Okay.
And yet we were selling 4,900 every 7 days.
And that was that era.
2020, 2021. Okay. I call it the silly season.
Got it.
So whenever you have that difference between supply and demand that's that dramatic, prices have no choice but to go up. So then I would see these headlines because the news, publication, everything, they like to create a sensational headline. listings explode 37%. That's where I came up with the phrase, a large percentage of a small number is still a small number.
Yeah. So it's like 5.
Yeah. Call me when it jumps by 300% and I'll be impressed.
And they're doing that with foreclosures now.
Yes.
Right? They're spiking.
Exactly.
They're spiking.
Yeah.
Oh, run for the hills.
We went from
it's
400 to 410.
Yeah. That's very important. So that's why you got to watch this show to get the realistic view of these numbers and what they mean. Because when you're just looking at a chart, especially me, when I started paying attention to when I got into real estate investing, I'm looking at these charts, my mind's just like scrambling. Like, it's too much information. I couldn't understand it. But just because you see a spike, you got to read between the lines.
Well, that's part of my process when I get ready to do YouTube videos. I get tons of emails, as I'm sure you do too, and from the industry, and I read the headline, and then I go in and read the body of the story, and it'll essentially fess up to where the headline doesn't match what's actually going on.
Yeah.
It's way down the bottom. But I do show, hey, here's what the headline says. Let's look and see what's actually going on in our market. And so, and again, with Cromford, it's easy to do. You can pull up. So I share the graphs, share the charts, and I like going live because then people ask you questions right on the spot. You know, What do you think of this? If I don't know, I just tell them, I don't know.
And for everyone listening, I love your SEO keyword friendly name of your show, Phoenix, Arizona Real Estate.
Yeah.
Is that the correct name?
That's the correct name.
And it's at Rick Helps on YouTube. That's amazing. So let's talk about that, right? So now you have this show, obviously been doing it since 2020, and I think you have I looked up 8,000 subscribers or so.
8,800, something
Great.
like that.
That's huge, man. That's hard to do. And especially being consistent. So what do you have to say to the real estate agents, real estate investors, anyone out there in our industry about having some type of social media? Like, how's it helped you?
Well, I think you need it. Because, postcards are dead.
Inexpensive.
And social media is free, but I think people get caught up and think, I can't do it unless I get fancy.
Mm-hmm.
And I don't look good or sound good on video. Well, newsflash, that's what you look like. People don't care.
They don't.
They just don't care. Look, I'm shorts and t-shirt. They don't care. And so, but you have to be consistent. And so just put something out there. I guess the goal is push content that your audience is starving for, like investors. Okay, if you're putting content out to reach investors, they're going to want data.
Mm-hmm.
And so, months of supply, everybody knows that. I think one of the misunderstood data points that we have right now is list price to actual sales price. That's a real moving target, and it doesn't tell you what you think it would. The list price 500,000, it sold at 97% of that number. Well, it probably started at 600,000, whittled its way down, and then the list price got lowered. But inside that list price is 3% in concessions.
Mm-hmm.
So as investors, you need to know where that data trend is going.
Got it.
And so you need to know not just overall numbers, but what's the most aggressive price point right now that's suffering. For us, it's like 500,000 and below.
Okay.
That is the entry level buyer that's having a hard time getting into the market.
Is it cheaper to rent than to buy right now?
Yes, yeah, in that price range, yeah.
Okay.
So, but then the flips they're having a hard time penciling out right now at the moment.
You got to buy deep.
Yeah, so you got to and some so the type of deals that investors are getting are just distress sales.
Mm-hmm.
Death in the family, maybe a divorce, but people are not, they've caught on pretty good that sometimes an investor offer isn't the best offer. Then you've got Open Door out there trying to do it, still trying to do it.
Are they still out there?
They're still out there. Their stock got down to 55 cents.
Oh, really?
Yeah.
Wow. And how do you see their activity in the market? It used to be a big
They
topic.
were, yeah, they used to be 6% of our total market here.
Really?
Yeah,
Okay.
and then when rates popped up in 2023, they had a fire sale. They actually drove our numbers down. They just were dumping things. And their stock is now, it got caught up as a meme stock. Their stock is $8.91 this morning.
Oh wow. So now the iBuyer, drove up a lot. Then they liquidated. They got rid of a lot of property. So what are your thoughts on the issues with short-term rentals? Do you think plays a part in our affordability and in our inventory?
Well, it's a real problem for Sedona.
Yeah.
I mean, that's saturated.
Mm-hmm.
And I think that's a problem that I think could probably work itself out over time, as like anything else. If it gets oversaturated, it'll correct. We're starting to see it as a problem if you're owning an Airbnb and a condo in Scottsdale, you're not filling up your calendar as fast as you used to.
True.
Or again, oversaturation combined with more enforcement by the HOA and CC&Rs. They're rewriting the rules, saying you can't have short-term rentals in this complex. Like, you may be grandfathered, but if you're going to go out and buy one, you can't now. A lot of neighborhoods clamping down. I think there's a lot of cities and states across the country that are trying to regulate it, like St. George, Utah.
Okay.
Really put in some strict regulation for short-term rentals. Like, you have to be, the owner manager has to be there to where if they call you, you can go there. You can't own it from Arizona. And they just killed that short-term rental market.
And that's what's important about listening to shows like AZREIA Show, your show with the stats, and you always gotta. I feel like, especially in the investment world, we get so caught up in financial freedom, time freedom, which is great. Provide legacy to our family, buy rentals, all that stuff, which you should do and focus on. But I really feel that we lose focus on this important information, because if you're going all in on short-term rentals and you're not understanding the bills and like how you just shared, the CC&Rs are being changed right behind the curtains. We don't even know where they're at.
Yeah, plus you'll see a headline that says Airbnb business is dying. And you look up and go, well, it's really not.
Mm-hmm.
It's still pretty good. My brother owns an Airbnb. He's doing quite well. Of course, he's up in the Olympic National Park in Washington State. But his town is trying to clamp down. It's like, you can't clamp down on Airbnbs when you're in a town that already has a lodging shortage, as far as hotels and motels. And so it's a fluid business. It doesn't, the pencil doesn't work out like it did. Some people went out and got really aggressive with it and overextended themselves.
Oh yeah. I don't think it's like something that you go out and build like your own hotel chain.
Yeah. I think Tina Tambor said it right once a few years ago. She was asked about the Airbnb business. She goes, you may be smart when it comes to real estate, but you know very little about tourism.
Hospitality business, for sure.
Sure.
And it also goes back into not, also being aware of who you're voting for in your local politics and all the people, or even state level, that talk about these rules. Because, every year the legislation pushes bills for rent control and longer eviction times, so if you're not paying attention to that one year, if you're not paying, it's going to go through, and that's going to ultimately affect all of us. So what else? So we talked a little bit about the Airbnbs, the iBuyers. What else are you seeing in our current market that everyone should be aware of or pay attention to?
Well, it's interesting if you look at pending sales and under contract.
Okay.
And you compare us to 2024. Week after week, the numbers line up exactly the same. It's almost freaky.
Okay.
I can show you a chart, and I shared it last week, that shows 2024 pending listings, up, down 1 week, up 1 week, down 1 week. You layer in this year, and you're hugging that exact same number, week after week. It's where you can look at it and go, well, here's where we're going to be next week. We're going to go down by 200. Pull up the numbers, and there we are. It's strange.
And is there anything behind it that you see that might be causing it?
Well, I don't think anything really changed between 2024 and 2025. In other words, look, real estate supply and demand is nothing more than that.
Okay.
So if you've got right now, let's see, this morning's numbers are 2,725 new listings over the past 7 days.
Okay.
And we put 2,630 of them under contract. Okay, well that's a pretty tiny gap.
Mm-hmm.
100 homes. So you're not going to have a crash unless that gap expands to where your new listings are way outpacing new contracts. But for most of this year, we have not broken over 2,700 contracts on a 7-day moving average.
Okay.
We stayed right there, just like last year. So the market has been stuck at this 26 to maybe 2,800 contracts week after week after week. And when I was reading that inventory is exploding, I'm looking and I go, actually it's not. What's happening is that when you start diving in, you're seeing that the only thing that's driving inventory up is just that slow little gap between the number of new listings that come on and the number of new contracts, which forces inventory to grow by like 200 homes a week. So if nothing in that changes, then your listings are going to continue to go up. The interesting thing is, at the first of the month, that's when all the expireds show up.
Okay.
People listed their home and they had their contract with the agent, and now the listing expired. Now you have 1,000 homes that are off the market.
Okay.
Right? That's the agent paid for the marketing, bought the sign, paid for the photography, worked his rear end off trying to find a buyer, failed. 1,000 of them failed.
Mm-hmm.
What's interesting now is the number of expireds almost matches to the T the number of homes that are listed as back on market. They changed agents.
Of course. Okay.
Yeah. Let's try again, only with Bob.
So do you think it's the seller being unreasonable?
I think the
Or is
sellers.
it
Well, I'm glad you asked that question. Here's the difference between buyers and sellers. Buyers know the market inside and out because they're looking.
Mm-hmm.
They're looking everywhere. They're going to Zillow, Redfin, Realtor.com. They're going to their favorite realtor's website like rickhelps.com. And see how I slid that in there?
Yeah.
But they know, and they know the pricing trends, and they know what they want, and they know they probably know more about them. When they call you and want to see a house, they know more about that neighborhood than you do.
They really do.
You know?
Especially if they're ready to buy.
Well, do sellers?
Yeah, they just want.
No.
Zillow said my house is worth 8 point.
Sellers know their house.
Yeah.
They do very little research on market trends, what's going on in the neighborhood outside of what they heard when they went to a, coffee shop.
Mm-hmm.
Sally sold her house for $580. And they don't spend the time with that. So if they do interview realtors at all, they typically pick the one that gives them the highest price. Oh yeah, I can get you 600. He doesn't know that.
Yeah.
It's the market that tells you what the price is. So there's the market disconnect I see right now. Now the buyer's saying sellers are greedy and stingy, and I'm saying no, they've got a lot of equity. They don't have to move, so they're going to give it a try. And if it doesn't sell, stay here.
Yeah.
That's not greed. That's just hey, if I get the equity, then then I'll move.
So I think you may have a good tip for like fix and flippers when they price their houses. So they're a little different type of seller here at AZREIA. You have a theory, the popcorn theory. I thought that was really cool. Can you share that when listing a house?
The popcorn theory. I had that, and I'm trying to resurrect it in my head.
I put you on the spot.
Yeah, you did. Yeah, it's escaping me right now.
You have popcorn. You have 3 bags of popcorn.
Oh, that's right. Okay, yeah. You got 3 bags of popcorn. So you go into the theater, you got the small bag,
mm-hmm.
and it's priced at $1. You got the medium bag that's priced at $1.50.
Mm-hmm.
Then you have the large bag that's priced at $3. Well, now, which one's the better bargain? The large bag or the medium bag or the small bag? Well, you don't want the small bag because for 50 cents more you can get the medium bag.
Mm-hmm.
And it's a sometimes the large bag is the better bargain.
It's like so huge. It's like you gotta carry it with two hands.
Yeah. So some people try to price as the small bag, and it sits there because for 50,000 more they can get this beautiful home down the street.
Mm-hmm.
And so it's the advantage that flippers have over our current sellers in the market. A lot of sellers really get hung up on, well, I made a lot of improvements to this house. Yeah, 10 years ago. The styles have changed. Flippers, they're on top of what the trends are today.
Like today. Yeah. So like I think you're saying like the middle bag's like the comps. That's the average market.
Yes.
So you gotta have more value
Yeah.
on your listing versus everyone else. So you might have that, whatever, the wine cooler, the pool,
The
or
wow factor.
the wow factor. That's what, I like, because if you price at the comp or a little lower with the wow factors, you're going to have the big bag of popcorn.
Yeah, yeah.
Right?
Yeah. But the hard part with sellers is when you sit down, they will just point out, well, I remodeled this kitchen. And you're looking at it and going, nice job.
Yeah.
Not really.
I hear you.
but they're invested in it.
Yeah.
And you walk that fine line of trying to offer some, practical advice without insulting them. But people are invested in their home, and every once in a while you run into a client that literally says, "I'm a blank slate. Tell me what I need to do." I love those people.
Mm-hmm.
Oh, I'd move that.
Yep.
Get rid of that elk.
Oh, that's so true. So what are some other stats or data that we should be paying attention to right now?
Well, supply and demand's number one. It's everything, and we
Okay.
proved that in 2020 and 2021, when demand was so big and supply was so low. Obviously, prices were going to go up. I use supply and demand and look at number of price reductions to see if I'm seeing any downward pricing pressure. And so if the difference between supply and demand right now is only 100 homes a week, there's no pricing pressure on the downside, there's no pricing pressure on the upside. But it varies by city. Maricopa and Buckeye are getting their butts kicked because they're competing with all the new builds. They're just getting slaughtered.
Yeah.
So they're experiencing a different market. Chandler, Gilbert, not so much. Scottsdale, hanging in there, doing great. So I look at a few things. I like to look at how many price changes, price cuts did we have this week compared to last week. And it takes kind of a monthly shift. We were coming down a little bit. This week we went up by 300 homes. Saying, okay, that means the people that listed through the summer got into the 1st of October, decided, well, I thought September would be better. It's not. I got to cut my price. Now I'm watching September and October, which are normally pretty good times for us here.
Mm-hmm.
Weather's great. People want to sell before the holidays. So October, that's a good time to list your house. And the buyers are out there. They're not out there in droves. So I'm watching the average list price. And when I watch the average list price, I have to pull out the high end.
Okay.
So
What's
I
high
like
end
to
to
watch
you?
the average list price below $1 million.
Okay.
And then see if it's trending up or trending down. Because remember, the list price is just what they're asking.
Yeah.
Doesn't mean that's what it's worth.
True.
So I like to see where that's trending. Are they coming, it's like the buyers are going, hey, we're down here,
Yeah.
yeah, a little lower, please. There's a lot of that going on.
Where are we at now?
List pricing right now, seasonally, we popped up a little bit.
Okay.
If you look under $1 million, we're kind of flat, which tells me that there's still optimism that the fall market's going to be good.
Got it.
So as you get to November and December, listings fall off the face of the earth. And everybody is optimistic in January.
So now you don't predict too far out. You do short. So what's considered short for you? So what?
A quarter.
A quarter. So what do you? Okay. So as we wind down, like what do you see going into the holiday and in the beginning of the year?
slow.
Mm-hmm.
I mean, we're an interest rate driven market. Everybody's got their eyes on the Fed, but they're ignoring the pressure that we have with all of our debt. So the Fed can do all kinds of things, but unless they start quantitative easing again and buying back mortgage-backed securities, I really don't see mortgage rates coming down that much to offset the affordability problems that we have. So I think I have some commenters on my channel. People are ignoring the fact that 20% of our population is going to die in 10 years. And house prices are going to come down. I'm thinking, well, if that's your buying strategy, waiting for me to die, that's not,
Yeah.
Thanks. Because I'm 70. I don't want to croak anytime soon.
I hear you.
But, so I think, I don't see a huge drop in interest rates enough to make a difference in the fall and holiday market. Nothing. They could go down to 5.9. I think we'd still kind of be here in certain price segments.
Okay.
But we tend to sell more houses when rates start edging up than we do when they go down. Because when they're going down, what's the first thing you think? Go down some more.
Oh yeah, kind of like when you're at the roulette, you're at the blackjack table or something. I gotta keep on playing.
Yeah,
I hear you.
When they start to go up, you pull the trigger. Uh-oh.
Yeah.
Better get out there.
So if I could kind of sum up some things that from an investor perspective, I would say if things are flat and steady, that means it's predictable. And as business owners, we like predictability, yes. Right? That helps when you're planning out your flip or whatever, or your refi on your rental, whatever it may be. So that's a good thing, right?
Yeah.
We don't want the crazy boom and the crazy bust, right? So that I like that. I like how you have that said. And then also was my other thought, the predictability. Oh, and if it's going to be drop dead slow over the holidays, nothing's really changing. So seasonally it slows down, plus the market we're in. So I think that's a good time to buy, right? So as an investor, you might be able to get your hands on a better deal, but you got to get the offers out and,
Yeah, I like this market.
Yeah.
I mean, it's slow, but I like it. I mean, I never wrote so many contracts in my life during the silly season.
Mm-hmm.
I mean, you pull up to a house, there's 20 other people there that want to see it. You're screwed.
Yeah.
Let's go see another. And and you started seeing the same people. You pull up in the car, there's that F-150 pickup truck again. There were only a few houses for sale. Every time you went to one, you looked at it, and you went to the other one, you saw the same agent, same client.
Yep.
Like you were following each other because there was nothing out there. Now, you got choices. You got buyers willing to pay for concessions, buy your rate down.
Mm-hmm.
I'm not erasing the affordability problem, but I'm going, this year's a lot better than it has been for a long time. Buyer's eyes.
Yeah, agents out there, whatever it may, flippers, because since we're referencing that time a lot, when it was booming earlier, a lot of those first-time home buyers got cut out of an opportunity to buy. They're in a position where they can, and it kind of brings me also back to the patting on the back of I'm the top 1% of my thing. Yeah, you ignored all the first-time home buyers, and none of them got a chance because you're dealing with the iBuyers and whoever would pay the most. Obviously, I get there helping their client, but there's this whole segment of first-time home buyers that didn't get to buy. So now it's like, here we are, a slow season. Let's help them get a house, educate them, teach them, whatever you can do. Let's help people get homes.
I've been invited to collaborate with it's a new company. I can't remember the name of it, but they're all AI driven.
Okay.
And it seems to me that he has built what Open Door says they want to do, where everything is, and I don't know how artificial intelligence can help map everything together, but that's why I'm anxious to talk to this guy.
Mm-hmm.
And so, what is the impact of artificial intelligence for investors? Is it just making it easier to comp properties? Is it making it easier for them to find properties? Does artificial intelligence give them more recent data on, like I say, there's a death in the family.
Mm-hmm.
What are they going to do with a house? And
good question. And I'm probably a little old school on a lot of that. So especially when it comes to comping houses, and I'm not an AI guru in any way, but when you just drive a pocket of a neighborhood and you look at the neighbors or you look at, hey, there's a Walmart a block out, not even, a couple of feet over, right? Like, I don't know, maybe AI has, like, when it comes to comping, I think you got to put your last pair of eyes on it.
Yeah.
And even going into like the distress sales, are there indicators, of course, in data that could say the likelihood of this house has from the top we could say the roof is bad and there's junk in the yard and someone died. Like, you could probably get likelihood of this person being motivated, but I also think it still comes to the point of, like, my wife has a client she's working with. It's like the daughter's helping the mother who needs to go into a home, right? The house is old and outdated, the pool needs work, all that stuff, but like, it's her only telling people she trusts and asking for advice to get the right people in front of her. And I don't care how much data you have, if you don't have a relationship or you're not trusted in the marketplace, I don't know, right? Like, maybe you might bombard that person and get them on the phone, but they're going to work with me or you.
I used to walk neighborhoods a lot. People don't like door knocking now.
Yeah.
I would go out on Sunday mornings and just, I told you that postcards were terrible, right?
Yeah,
but
yeah.
at the time, I was mailing postcards.
Okay.
And then right after I mailed the postcard, I'd take one postcard with me, and I'd go through and I'd walk through the neighborhood. And I'd just talk to guys who were out washing their cars. And then I'd have the postcard with me, and I'd go, hey, I'm Rick. I just wanted to show you I'm no better looking in person.
I love it.
And
nice icebreaker.
And so you get to talk, you get to know them. And I love the houses that had old basketball hoops in their driveway.
Oh, that's a good one. Yeah.
Kids have moved.
Mm-hmm.
They never moved the basketball hoop. Going back to YouTube for a second and postcards, let me tell you this number, because you were talking about the importance of social media.
Yeah.
A postcard, they're about 90 cents to make one.
Mm-hmm.
It's probably 90 cents to mail one.
Oh, it's getting high, yeah.
And you mail it to 100 people, you've spent $100, right?
Yep.
Well, in YouTube, you don't need a lot of subscribers now. YouTube just wants you to be authentic.
Got it.
You don't need a fancy studio, although I love this. This is fun stuff for me. YouTube likes authenticity. They want to know, is he real? And they'll watch you for 10 months before they reach out to you. Most of the calls I get, I've been watching you over a year before they reach out and they call me. But when you make a thumbnail, you should put your picture on it every time, so they just recognize you. Netflix has learned that thumbnail, it's an impression. In other words, you go to YouTube and you want to look up, and you just pull up YouTube before you even do a search, you're going to see all these square pictures. Those are thumbnails. Same with Netflix. You get on Netflix, they discovered that if they don't have the main actor's picture in the thumbnail, it gets less clicks.
Wow.
Because people like Denzel Washington.
Mm-hmm.
So they're going to, that's a Denzel Washington. I'm going to watch that one. I want to see what this movie's about. That's called the click-through rate. So in YouTube, anything over 6%, they put it in front of 1,000 people, and 6% of them have clicked on it. That's a decent click-through rate. But over time, your thumbnail keeps rolling up in front of people all the time. Those are called impressions.
Mm-hmm.
My channel, I think I have 7 million impressions.
Okay.
That's a lot of postcards.
Oh, yeah. I hear that.
So if you just do, like my lender buddy, he just mailed out postcards last month, and I said, why?
And, that's funny when the analogy with Netflix and the stats you're giving, because sometimes, and it makes me think through it, because now sometimes they change the thumbnail. Like, so Netflix, sometimes they only do like 2 seasons. You're like, oh, I wish they did another one, right?
Yeah.
Then you see a new thumbnail on it, and you click on it because you want to see if they added another season or whatever, right? So it gets you back re-engaged if you just start changing them.
It does.
Yeah.
And I go in and change my thumbnails every once in a while too, but I look at, like if I pull up and look at a video I did, a live stream that I did with my friend, and I'll see if I can pull up a quick number here real quick. Here it is. So you and I do the same thing, go back and look at analytics, right? We had only 448 views. But if I look at the analytics, it put me in front of 2,000 people. So 2,000 people saw our pictures.
Yep.
Now, that's 2,000 postcards. 450 of them decided to actually watch the video. Not a big number. That was a very low performing video, but you think,
It's free.
when have you been in a room in front of 450 people?
It's hard to do.
Yeah.
It's hard to get there.
You got to spend money for a lunch and learn, and you got to, and even webinars, I don't know. I've tried webinars in the past, haven't had any success. So I just think people are starving for information. But I think you need to help people understand the difference between the real numbers and the news. By the time it's on Channel 12, that ship has sailed.
If anything, Channel 12 is getting information from you.
Yeah, yeah, sometimes.
That's true. So, I hate to cut you off, man. I love, like we said, we're going to talk shop, and I could probably keep going. But I got to wrap it up. So, any parting words for the AZREIA Show listeners?
Well, yeah, tune into YouTube. Rick Helps, youtube.com/Rick Helps, and take a look, see what you think. But more importantly, if you have any questions, just shoot me a question at rick@rickhelps.com if you want any data or anything. I know a lot of agents simply watch my show because they don't want to pay for the subscription for the traffic report. So like okay, but I want to help Tina out as much as I can. So I credit them a lot. But I think the market's data driven. Stay on top of the data.
Well said. Well, that's a wrap, Rick. I appreciate you being here. I'd love to have you back again, maybe for some more updates. Here at the AZREIA Show, make sure to like, subscribe. And what happens when people like your show and they click on the button?
Sometimes the lights flicker.
Yeah, that's pretty cool. So help us out. I want to see if it works, right? So, but also, if you're newer to real estate investing, I wrote a 12-step email series, 12 steps to becoming a real estate investor. You'll interact with me personally. You'll get an email every day for 12 days. So AZREIA.org/12 steps. And I'll see you in the next one.
Thanks for listening to the AZREIA Show with your hosts, Marcus Maloney and Mike Del Prete. We hope you enjoyed this episode. If you found this information valuable, head over to AZREIA.org and learn more about our community.